Delta, my man, how you doing? Toshiro, good evening. How are you? Bit of a random stream. I was going to do a video, but I just prefer going live. It's just much easier. So we're going to discuss structure and what my thoughts are at the minute for Bitcoin. There's been a lot of talk over the last couple of days about structure, so we'll get into it, discuss it, and hopefully it'll clear some things up. I'm good, mate. I'm good. Getting ready for my honeymoon, actually, so I can't wait for that. We'll just wait for a few more to get in, and then we'll go over some things real quick. Be a quick stream, won't be on for too long. The internet's playing up, that's partly the reason. So if all goes well and it stays online, Aussie internet is the worst. So yeah, we'll just see how we go with it, and we'll go through some stuff. So there are no spaces in the Discord at the minute. I'm going away for a couple of months, so when I get back, I might open some spaces up, but for now it's closed. All right, I think we'll just get straight into it. This will be recorded, so it will be on YouTube after this. If you miss parts of it or whatever, you can watch it back. Yes, I live in Australia. I'm from England originally. I've lived here for nearly 15 years now. Yeah, I am English. I'm a Mancunian. Okay, structure. Let's go through structure. First of all, let's clear this up. So someone tweeted 12 weeks ago on the weekly Bitcoin broke structure. Now, looking at this chart, I don't see a structure break in the way that I use it. And it's really the traditional way to use structure. It's basically a swing low, right? That's what we're looking for. So when we mark out swing lows, we do it like this. So you have a low put in, then we have a lower low, then we have a high low beside that. That's the way I use structure, okay? So this is a swing low, this is a swing high, swing high, swing low. You can use a 5-point pivot as well. It doesn't have to be a 3-point pivot. It's entirely up to you. I've found, especially on the higher time frame, the 3-point pivot to be more effective. On the lower time frame, you might want to go to a 5-point pivot. You'll get less noise, but I still stick with a 3-point pivot. There's no set rule for this. All you want to see is this sort of structure here. That is a swing low. So this is what we need to refer to when we're talking about structure. Now, there are other ways to view structure because it might not be, this might not seem right to you, but this is the traditional way. I've used this for years. I used it back in when I was trading FX, and I brought it through into crypto. I use the exact same pattern for it all. Now, the pattern that I use, and a lot of people use this, it's nothing fancy or new or anything like that. It's just a structure pattern, but it's a particular one that I use. Okay, that's the wrong. So what we need to see, we have a swing high that takes out a swing low. Okay, so this is a swing low, this is a swing high, this swing high took out this swing low, and then we closed above it. That's a structure break. That's what I consider a structure break. Okay, that candle right there. Now, if we're taking this concept up here, we have a swing low. This was the last swing low, but it didn't lead to a new high. We'll talk about that in a second, but this was the last swing low before prices went higher, and then we come back down and we held that area. We never got a close through, so with no structure break. If you use wicks instead of closes, that's fine, but I can guarantee you closes are better. Wicks will give you lots of false signals. Closes will sometimes give you give you false signals, you can use them as false positives. So you can use them to get back into the market. And there are certain ways of doing that. And again, it's not rocket science. It's simple. If we've got a break of structure here on the weekly, which we have, and we'll go through that right now. So why is this? Why did my indicator give a break of structure? Well, we've got a swing low that took out this swing high, and then we closed below it. The difference with this one, which I spoke about the other day, was if we go back to these two highs here, we have a swing low that took out the all-time high at that time. Okay, so that's way more significant. We've had a push up back into the all-time high, which was here, and price has failed to reclaim it. And we've closed through the area at where price started from. Okay, so this was where price leg started from. That led to this break. Okay, and the same thing for here. We have a swing low that took out a swing high. And then we get a close through it right there. That's the short. Down we go. This one's a little bit different because, yes, price went up from here, but it didn't take out these two highs right here. Okay? And we sort of left poor highs up there, if you like. It's a double top. It's not the best structure, to be honest, at the highs. It's a reason, another reason why I do believe that we are going higher eventually. You have to think about the context of what's going on in terms of structure. It's okay saying, well, this is a break in structure, this is how I view structure. You have to understand what's going on in terms of buyers and sellers. So let's go to these ones right here and let's discuss what's going on. If we've got a swing low form right here, okay, and then price has pushed up and broke previous all-time high, what's this telling you? There is still demand in the market. The most important area after this is what happens through that prior high. If we cannot get above and reclaim, well then there's no demand up there anymore. The demand then comes back down to this area. Okay, so it's all about discount premium. Traders like to buy at a discount and then offload at a premium. And you can use this in any way, whatever you like, it doesn't really matter. But just understanding that concept will help you take better trades. It will help you in regards to your context and how you frame trades, for example. Do you want to be buying up here? No, you want to be buying down here. On the move lower, you can use Fibonacci's, whatever you want, okay? We know that if we use a Fibonacci from swing low to swing high, it comes back down below the 50 level, that's at a discount. This is a discount zone right here. This is a premium zone in a bull market. In a bear market, it's the opposite. So it's important to understand what's going on instead of just thinking about closes and sweeps of areas. You have to understand what's happening in regards to the traders as a collective, okay? Here, the market's pushed up and then we've sold off from this sort of area at the top, right? Okay, so this is, you could call this a supply zone. I don't really use them terms anymore, but it's technically that because that's where the market sold off at that point. But if you think about this, right, let's just think about the concept I've just used here. Where is the real demand within this price leg? And why is this price leg more important than what's going on in the internal structure that we have to the right hand side? This area here. Why is this more important? You have to think about it. On the weekly chart, I'm not talking about any other time frame, like you would have had a structure break on the 12 hour, the 4 hour within this candle here somewhere. But we're talking about the weekly, so we have to focus on that for now. Okay, the real structure break was here because it closed below a swing low. That was the first close we had below a swing low. That's the structure break, technically. None of these are, and another reason for that is because it come into an imbalance. Imbalances are very powerful in markets because it shows you where the aggressive participants in the market pushed the market higher in this case, or pushed it lower. Showing you an imbalance between buyers and sellers. Okay, so when price comes back down into these imbalance areas, we want to see those buyers stepping back in, and they often do. These are one of the best areas to get involved in the market. there's your imbalance. Okay, where did it start from? So this move here, we just focus on this area. We had a range. We had an imbalance form. The market pushed higher. It comes back down into this area here and then pushes up. These are very important areas within the market. What I like to see below an imbalance in an uptrend is a range, because a range literally is telling you that, just remove this, this is where fair value was prior to this breakout, okay? So, if we're thinking about a range here, this is fair value, right? If you know about market profile, you'll understand what I'm talking about here. The market found fair value, and then, so this, you can consider this balance, and then we go from balance to imbalance, and then we go from balance again. So where's the most significant area on the chart? Well, it's here. We do have a little bit, think about it, it's the weekly. So we do have some sort of balance through here, imbalance, back down. So this is a key area as well, but you have to understand these areas are just as important, okay? So if I'm thinking about being bullish this market right now, what area led to the new all-time high? It was this area right here. This is the area where price ranged before we had a breakout. We had a little bit of a pullback here and we pushed higher again. So you've got the imbalance here that's important. You've also got this area right here. It was the last down candle before this up move. So this is important as well. And then you've got this area right here. This is the key area break of all-time high. That's the most important thing to think about. And now if you think about it, these are your demand areas. This was the swing low that led to the all-time high. When price comes back down into this area, notice the range that was formed here as well. If you remember it, this was the Elon Musk candle through here, okay? When price comes back down, it holds and then pushes back up. It even holds again down here, and then we flip it. And it's even been pivotal through here. So it's an important area on the chart. And if you can identify these areas, you'll stop taking stupid trades. Think about this here. This was the range. So this was when we had the Luna fiasco and everything like that. Do Kwon. Think about it. Price has come back up into here and formed another range. So we've got a lot of demand through here. So if price did come back down in here, a lot of people will probably think that it's over. We're back into a bear market. I don't believe that. I think this is the best opportunity within this market right now. I'm not saying it's going to happen, but it's just an area I've got my eye on. The first area is right here on the weekly. So if we do get a sweep of this low into this area, then I'm just going to look at lower time frame price action. Somewhere in here. For a trade back up to the range low, the lowest close. I use closes for my ranges. You don't have to do that. You can use wicks or whatever. But that's the trade I would take for a long setup. The other one is if it reclaims this area, starts pushing up through here, you can imagine what's going to happen. If this week closes down here somewhere, then this will be a swing high. So at that point, if we do get a V bottom, which is, it can happen. I don't think it's going to happen, but again, I don't have a crystal ball, so anything can happen. But if it did happen, this will be a great opportunity to wait for that break of structure through here into the bearish imbalance, so we can expect a little bit of a pushback from there. And then maybe we have a little range here, and then we push up, back up into this area. Then we wait again and see if it flips. I would actually say that this is pretty much the range high here, because this was the first high that was put in. We had the close, deviation back under, and then retest, down we go. So somewhere in here would be an area where I'd take profit from this, because we're still technically in a range. You can always buy on a breakout, doesn't matter. Now, what I'm going to talk about today in here is quite surface level. Some of my members are in here, they will know. I could talk all day long about this and go into high quite a lot of detail about it, but I'm not going to do that in today's video. But I think you can sort of understand where I'm coming from now. When I said break of structure, that was a joke on Twitter the other day. I wasn't being serious. If you were looking at my tweets prior to that, I was taking the piss. Just note that this, anywhere within this price leg, I'm considering bullish, and anywhere below the 50 level on the Fibonacci down here is discount. So anywhere in here is a decent buy opportunity for spot bags. Now, how do we know that we're going to be wrong? So let's say, let's go with the other version. So we've mapped out the long scenarios. Okay, we need to see certain things happen. What about shorting? Well, shorting was for up here. So I don't really use the weekly. I use the daily more than anything. This was your short up here. Again, it's the same thing. Look at this move. Multiple up candles in a row. Takes out this high here. Gets back below. There's your short. Down we go. We don't break bullish structure. We haven't actually broke it yet. We do have a swing high here. However, it's not taken out this swing low. So I've got nothing going on at the minute here. We also have an imbalance. So we'd need to get back above here, preferably with some momentum of sorts. Now, if you look at the range low, it's right here. So if you think about it, the lowest close, that's the range low for now. You can see the retest. It's not really doing anything. Okay, so there's nothing to do right now for me in terms of my system. If we've got back above here, then this could potentially be a trigger. But the real area it needs to get back above to have confidence, it's not to take a trade, it's just to have confidence, is here. But we also have this right here. Now, this is where my trading comes into play, because I don't just buy things and bag hold them like a lot of CT. I'm a trader, so I trade it level to level. Bull market, bear market, I don't care. It's level to level until proven otherwise. Then you can start swinging for the hills. But I need to see something significant. So for this one down here, for example, is a great example of it actually. Range low, deviation back above. At the same time, we have the swing high. That took out a swing low. Reclaim. So long as we're above there, this is what you would do. Stop below the low. And you would just aim for higher, but you trail your stop loss as price is developing. Or you just buy and hold if you're using a spot system, for example. I like to use both. I like to use multiple different systems going on at the same time. That's just how I do things. It's not for everyone, but that's just how I do things. It covers all bases. So I've got mean reversion strategies, trend continuation strategies, spot buying strategies. I've got an EMA strategy where I literally will buy on a retest with a certain pattern. I've not deployed that one for quite a while because we've just been in this range. But in Q4 of last year, it was very, very profitable within this area on altcoins as well. Q4 last year was my most profitable time in the market. When we have trends like this, if I was to throw on a moving average here, you would see it. Multiple retests of that MA. Now, they say MAs don't work. MAs work in certain contexts. So in certain market conditions, moving averages will be your friend. In ranges like this, they are not your friend. It depends what time frame you do trade though. So on the daily, we might have had a moving average come up here and then chop through this part, but then it worked out nicely through here. It would have definitely worked nicely through here. But I tend to want to see it in clear air, in a trend. Sometimes you will not get any retests whatsoever. So on this one, we hardly got any retests. This was a retest of that moving average through here at one point when we got this sort of move down. That's a V bottom that's worth buying. So in terms of structure here, we don't really have much to play with because If you think about this as well, we have swing low here that took out the swing high. Okay, so this area, if price returns to there, it might be a little bit of a trouble area for price. And what happens around that area will be significant. If it just pushes up and then comes back down, well then you'll be able to short up here. If it was to start ranging through here and then starts pushing up, then I'd be expecting higher prices because you are then back above this sort of range here. So this was the first range that was formed. Deviation back above, retest, up we go. We held at this area, okay, and then we broke down. So it's a significant area where we had buyers stepping in, and then anyone that got caught above this high is now underwater. So when the price comes back up into that area, they're likely going to get out and take the loss. So that adds to the sell pressure. Now, all of this is kind of irrelevant. We need to just see what happens at the time. We can come up with all these different scenarios and stuff like that. What is price doing at that time? That's all that matters. Now, if we go to Ethereum, feel free to post questions in the chat as well. Happy to answer any questions you have. If you look at Ethereum, it's a very, very similar thing going on here. Every time price comes down into this area, it holds. Imbalance. Where did this start from? This range here. This was fair value, balance, imbalance. Price returns back to not the lowest imbalance, but this imbalance right here. And we know that there's demand coming in. You can see this candle right here. Until that breaks, this is worth buying at the lows. Also, on this price like here, this is discount. Okay, it's below the 50 level. That's your discount zone. We always want to be buying in discount. It depends what time frame you're on. Like here, for example, on this move lower, you never got a chance to sell on the weekly at a premium level. So premium in a bear market, discount in a bull market, that's where I like to buy. You won't see me buying up here in a bull market. I always wait until we get below at least the 50 level of the price leg. Okay, so let's make sure you understand what I'm talking about. We have a range form, then we have a move, breakout. From the bottom, so from the swing low, the last swing low, to the swing high, the highest swing high. Anywhere below the 50 level is where I look for bullish price action. In an uptrend. In a downtrend, it's a little bit different. But you'll see how effective this is. Because if you think about markets, the only thing that matters is what's happening in regards to buyers and sellers. That's all the market is. Okay, people are trying to buy at a discount and then offload at a premium. That's how you make money in markets. It's very, very basic, but it's important to understand. And there's different ways to identify discount and premium. Many different ways, and it's different for each time frame. So it's all relative to the time frame that you are on. So on the daily time frame, it'll be different again. But if you think about what I've just spoke about on Bitcoin, where is the demand? What area of price led to a new high? Breaking this area, for example. It's this area right here. Okay, so this is the real demand area. But again, what's price telling you at that moment in time? It's holding here. So we could get this. Price could fail, push down into this area, then we get back above. At that point, I've spoken about this many times. If you think about this as fair value, right? This is your value area low down here, value area high. If you think about if price got below there, okay, tapped into this demand zone, then reclaimed prior value area low, the likelihood then is that we will trade towards the PLC or value area high. Okay, so this is just a typical deviation, which SC will talk about. XO, those guys, they're the range deviation traders. It's all very similar. I've tested hundreds of different systems. Range trading is very similar to all of them. It's what price is telling you. What's the story? You have to think about what traders are doing here. Okay, if you're getting short below here, you're getting short basically at discount in an uptrend. So if you're going to short the market, you short into a prior high and you're long into discounted zones. And if you keep doing that, you'll make money. Let's just demonstrate it. Pushes up, comes back into discount. Swing low formed. Pushes up, comes back into discount, pushes up. And again, same thing's happening. Price leg here, pushes up, discount. You can move it up to here if you want, because this was the last sort of area where it ranged. Comes back into that area. Are we going to push up? Who knows? I'm not here to tell you what's going to happen because I have no idea. But we could do something like this. Who knows? We have the ETF decision soon. That could be the catalyst for higher prices. No one really knows what's going to happen next. If we go over to Solana, I don't particularly use fibs, to be honest. I've got indicators that just show it me, so I don't really need to use them, but it's just a way of, it's just a simple way of showing you discount and premium. Solana is very, very similar as well. Like if we think about this, price comes down here, right? Breaks through this low. Why is this low important? Because this was the low that led to this high. So it led to a break of previous all-time high. At that time, this was the all-time high. Price comes back down. Lo and behold, where does it enter into? The imbalance. Okay, you can see that imbalance there. A lot of people call it the FVG. Call it whatever you want. It's an imbalance. Price comes back down. Very, very sensitive areas within the market. It pushes back up. So this was the last area. This was where the demand happened. Okay, this was the last area where price ranged and then pushed up to new all-time highs. We got back below, retest, down we go. There was no more buying within this area. So no buyers stepped in. They got flushed out. So on a return to that area, what do you think they're going to do? If you've bought in here and price is closed below, what are you going to do as a sensible trader? You're going to get out on a return, take your loss on the chin, and then wait for something else to happen. Wait for a reclaim. Now, reclaims are important as well. This is not a reclaim. Why is it not a reclaim? Because there's no space between the break and hold. So again, you need to think about this in terms of what's happening. So if we think about this level here, we had a range form, right? Interestingly enough, it was at the area where we had buyers stepping in back in 2021. So it's a significant area. We are holding that area once again. So I'm not just marking this level out because there's a bunch of wicks here and a bunch of wicks here and it's an SR level. I'm explaining to you why it's an SR level. And that's important. You don't learn anything from just drawing lines on a chart. You need to go a little bit deeper into it and understand what's going on in the minds of traders. So if we think about this here, we've had a breakout of this area. Fair value, balance, imbalance. What happens? We have space between the breakout and the retest. Here, there was no break. So there was no space between the breakout and the retest. It broke out and then got back below straight away. That's a deviation. Down we go. There was no acceptance. Why is acceptance important? Because it's time. It's acceptance. Traders have now agreed upon a new value within the market. A new area of value. They've accepted prices higher. Here, there was no acceptance whatsoever. Price come back above, and shorters said, not today. Straight back down. There was no acceptance whatsoever of higher prices here. Whereas here, there has been. So that's important. So just like this low ended up leading to an all-time high, this area is now holding, and that's why I'm saying $120 on Solana is important. And if you think about it, it looks very, very similar to this here. Where are we? Very, very similar. And I pointed this out a long time ago. It's very, very, very similar to that. You can see what happened. So we had a range, we had a massive range form here, bottom left of the screen. We had a breakout, and then we had another range form. Then we had a breakout with space, so acceptance of higher prices, comes back down to that breakout zone, and then away we go. Same thing's sort of happening here. So I'm a bull on Solana, so long as we stay above, just delete that, as long as we stay above this area. If we were to start breaking down here, especially taking out this low, and then held below, what I'd wait for, I wouldn't just short it straight away, I'd wait for something like this. So something like a deviation, a break above, just get slammed back down straight away. That's where I'd short. Especially if it put in some structure like this, where it's left a couple of equal lows below this sort of pivot area, if you like, and then we trade it back down. I don't think that's going to happen. So for now, got a bunch of scenarios in my head, but this one is what I'm looking at now. Any sort of move into here is a buy. And the longer we remain here, the more bullish I am. You don't have to buy the bottom. You can just buy the breakout. How do you know when the breakout? Well, there's various ways. You can use oscillators such as the RSI, the Awesome Oscillator. I have a different one as well, and it will literally, it will do something very particular that'll give you a clue as to whether it's going to break out or not. And it rarely happens. But when it happens within the context of this, it's very powerful. And it allows you to get in on confirmation instead of buying an aggressive dip into the lows. The only other thing I would add to that is the more aggressive you are as a trader, the better risk to reward you're going to get. So the longer you leave it to buy in, the less risk to reward you will get on that trade. And that's why being bold often pays. So by that I mean being aggressive can often pay. You can also get run over quite a few times. So again, higher risk to reward, probably going to lose more trades. Lower risk to reward, probably going to win more trades. That's just how the markets work. So it's entirely up to you. There's many ways of trading this. But right now, Solana, there's no structure break whatsoever on the weekly. Why? Because this is the key area right here. This is the low. This is the last down candle. You've got a bunch of things here. Just think about what I'm going on about here. So we have the last down candle. We have a range. We have a pivot level. I've explained why that pivot level is important, because it was this area here where buyers stepped in. It was the imbalance as well, where price come back into it. Okay, this was the demand in 2021. Then it flipped to resistance. Okay, in 2022. We've just broken out there. You could say this is a cup and handle if you are a classical technical trader. There's so many things you can come up with right here. And we can all come up with the same sort of scenario, the same thought process, but we're all using slightly different things to come up with that. But again, it's the same thing. There's no need to complicate. There's no need to use fancy words. Again, let's get this here. That's the key area, really. It's that low right there. And then we have this low right here. So what I'd love to see on Solana is a pushback down through here, take out some of these lows, get back above. At that point, that's when I'd sort of load in. There's nothing really to do here right now. I can't see this breaking out anytime soon, really. I mean, if we're talking weeks, probably September, August, September maybe. And if you look at that there, at the bottom of your screen, it's not that far away on this chart. September or August could have a breakout setting up on Solana. And if you've missed the bottom, it's fine. You can just get in here. It doesn't matter, because at that point, we're probably going to take out the previous all-time high. Yeah, this will be recorded. I'll leave it up on YouTube for a bit. Okay, so structure's still bullish on Solana on the weekly. That's the most important thing. Bullish structure, similar to this. Again, you can wait for a deviation of these lows if you want to get on board. It's entirely up to you. Why not use the closes of the candle instead of the wicks on Sol? Closes where? Closes where? If I'm using this, right, so think about this. I use closes for my range high. Now, what I'll do, this is how I do it. You don't have to do this, but I'll use the first close and then I'll wait for a deviation of that close. So we get another high close. And then I still use the first close, because what tends to happen, think about it. Got to think about what trades they're thinking about, okay? So, highest close, breakout, back below. Now, most traders at that point would be holding on, and then they'd be feeling a lot of pressure as price is moving lower. They're even more underwater, community member at this point, and then depression all the way down. Now, a lot of people would have just capitulated somewhere in here. They've had enough, they've got out, they've sold the bag. But then you have a little bit of a conundrum as price comes back up into here. Okay, so anyone that bought down in here is probably going to start taking profit as price hits the next area of resistance higher up. So you'll have a lot of people taking profit here. You'll also have bag holders getting out. Even though they've had to wait for nearly 2 years, they probably get out of this area. So you're going to see a little bit of a pushback as price comes back into this area because of that sort of mindset of the trader or traders. So I'm just reading the comments. Yeah, so you're on about these weak. Well, I mean, you can use this. But again, you're going to get a lot of chop. So I tend to go back to the prior range. Now, how do we know what the low is going to be? Well, I tend to look for certain characteristics of price, okay? So these lows have held. We don't always see it, but we do see at least one sweep of a swing low before price goes higher. It's not guaranteed, but I've seen it many times. What I've seen before is the initial low holds, but these little ones in between here, okay, the internal structure swing lows, do tend to get taken at some point. I'd be more inclined to then bid this area if we do get that. So that's what I prefer, and you can see it down here. So if we go here, we have a range form. This was the initial low. We get a sweep of the internal structure. This one holds, and then we push up, and away we go. This one, again, we had the swing low here, pushes up, gets taken out, and then this low here holds, and we go up. Right here, we've not really had a sweep of a swing low. We've had this swing low get swept, I guess. But it's not really within the vicinity of where I'd like to be getting on board. Again, this is just a meme triangle pattern. It's nothing fancy. Very similar to this. Doesn't have to work out. You've got to think about this, right? All we've got right now is this data. We don't have anything else on the weekly. So using a weekly chart to start throwing on fractals and stuff like that, although they do often work, eventually they're going to fail. Okay, and we can't really have too much confidence on a data set like this on the weekly. There's only been one occurrence of a bull market on Solana. We are in the second part of that, hopefully, because I do want prices to go higher, believe it or not, because who doesn't want the market to go up? It's so simple. But I'm not going to sit on Twitter and start posting garbage. Bull posting constantly. I mean, it's so tiring doing that anyway. I have to be true to myself. I have to tell you what I'm thinking and what the market's showing me at the time. Okay? You'll get a lot of bears posting here saying that we're going lower. There's nothing bearish about this at the moment. I don't see anything bearish about this chart at the moment. All I'm seeing is a reclaim of a very, very important level on Solana. And it's potentially going to go higher out of it. We don't know yet. So, theme for TradingView is, that's the blue, 377FFC, and the red is B53D91. So I can only give you my honest opinion. I'm staying true to myself there. I don't care about followers, don't care about any of that crap. I'm not running like deals with exchanges or anything like that. So I don't care about any of that. I've just got to be true to myself and give you my opinion on the market at the time. If it's bullish, it's bullish. If it's bearish, it's bearish. If we're ranging, then we're ranging. It is what it is. Like, you'll get the truth from traders. You'll get what you want to hear from perma bulls or perma bears. It's as simple as that. And it's entirely up to you who you take advice off. I wouldn't take advice off anyone. I'd learn to trade for yourself. But it's important that you understand very, very simple concepts. Now, someone said that this was a break of structure here. I mean, it's not. Maybe it's an SFP, but it's not a break of structure. There's no structure breaks. You have to think about what structure is. It's a swing point where a change in the direction of the market started from. That's the structure low. Not any of this. This is just an SFP. An SFP is basically, you get a high put in, price does this. Usually you want a bit of space between the first high and the second high. When price comes back above this high and then closes below, that's a swing failure pattern. Tom Dante taught me that. I am not going to claim it as my own. It's a Tom Dante pattern that he taught me and has taught pretty much all of the traders you'll see on Twitter. So this right here, this right here is an SFP. You can call this an SFP as well. Any candle that's gone through the low and then closed above is a swing failure pattern. This was an SFP, technically. Not on this time frame, on the daily, I believe. But again, it failed. They don't always work. So, you know, don't take everything as an absolute. Nothing works 100%. We work in probabilities here. But it's important to understand what the patterns are. I don't know where some of you are getting your information from, but I've been here for 9 years. I've been trading markets for 9 years now, and I'm still learning. I learn every single day. The market teaches me a lesson every single day. I am not a master of markets. I am just a student forever, because markets evolve all the time as well. If I've tested multiple different systems on this, right? And if you go all the way back to here, there are some that work pretty much how they work now, but there are a lot that fail. There are a lot of systems that work now that wouldn't have worked back in the day. And that's just because markets mature. More participants come into the market, more liquidity. That changes the dynamics of the market, changes the microstructure. Like we've got now, we've got new institutional money coming into the market. We've got countries buying Bitcoin or selling it if you're Germany. So markets evolve over time. You've got to evolve with them. You have to always be humble. You have to respect the market. Can't come in thinking you know it all, especially if it's your first cycle. You will be taught a big lesson. You will become a community member if you're not already a community member. I'm a community member of many different communities, and it sucks. So take my advice in that regard and listen to those that have been before you. You may think you know it all. I thought I knew it all back in the day. I didn't. I didn't know anything. I still don't. Still learning every day. I just let price tell me what to do, and I take it from there. I don't care if the market goes up or down. I prefer it to go up because you can make more money in a quicker time and relatively easy. But the market will do what the market does, and if it's going down, you can't fight it. Okay, you can't. Anything you do or say, it's not going to change anything. So if the market's going down, if you've got something showing you that the market's going down, just get out. It's not the time to be holding on. Okay, if you take that approach and just let the market talk to you, you'll do so much better. But too many people want to come into the market and start saying, oh, we're going to do this, we're going to do that. I'm sorry, but you're just not going to make it. Don't really look at total 2 or 3 charts. We can have a look at it, but it's not really something I pay too much attention to. We'll go on to INJ soon. I mean, if we're looking at this, right, first of all, key low. Once we've got back below retest, then we've... Look at this, look how pivotal this area is right here. So, once again, we've got the same thing happening. Think about the process I've just shown you. I'm using the exact same process for everything I do. Now, what close, sorry, did I say to look out for? So, if you think about all these lows here, we've got a break of structure through here, okay? The first highest close was here. Then we got the breakout deviation back below. Lo and behold, what holds? The initial high. The initial highest close. That's what holds. Back down we go. Now, where are we within this price leg? I'll go over why this is important here. Discount. So anywhere in here is a buy opportunity in a bull market. Are we in a bull market? I think we are. I don't think we're just going to roll over and start going. If we are, then it doesn't really matter, does it? I'm about 10-15% allocated, and I've been like that for a long time. I've just been trading a lot of this, so I don't really care anyway. I'm a trader. I'm not. If you want bull hopium, then CT is your sort of area to go to. I'm not going to give you any of that. I'm just going to tell you what I think. But let's look at this low. So price breaks out. Again, last down candle. At the area where price broke out, the market ended up pushing higher, breaking into a new all-time high. Then we had a breakout, deviation back below, and then see you later. This was the lowest close, and as price closed through that area, upon the return, it retested and then moved lower, forming a rounded bottom. Now, in 2022, I said, and you can go and look on my Twitter at this, I said I want to see charts. So I was shorting all the way down in here. One of the very few that were doing it in the bear market. All the way down, and then we got this rounded base. I was talking about a rounded base. I put this on so many charts on Twitter, and I said this structure is probably going to roll over. Luna was one of them that we shorted at $100. Matic was another. Solana was another. I said what I'd like to see is altcoins, excuse me, do what Ethereum did back in the day. Now, if we go back to the E chart for a second, I'll show you. Look at this rounded bottom structure. And we'll just show you what happened on ETH. It's the same pattern. Breaks down, retest, down we go. What do we get? We get a rounded bottom, accumulation structure. And then we get some sort of range after the breakout, and then we get higher prices. Now, it doesn't always do it exact, but the characteristics of price are very, very similar. Let's go back to that total 3 chart. Same thing. Look at the structure. Look at the way the market was at this point. We got the underside retest and then down we go. Now we've just put in a rounded bottom. This was the breakout. Now we've not gone all the way up straight out. but we have broken out. So what's the most important area for price to hold now? It's this area right here. This was the range. This was balance, imbalance. Quite often we get a return back into balance. We get the retest and then price pushes up. What you want to see on total 3 is the same pattern. I think we're just going to keep doing this. Pull back and then break out. At this point, if this happens,